This is Nayib Bukele, the 41-year-old president of El Salvador, the self-proclaimed coolest dictator in the world, and the CEO of his country, and a state leader who was the first in the world to proclaim Bitcoin as his country's official currency. This last bit happened in September of 2021, 2 months before the cryptocurrency reached its historical record price of over $60,000 per unit, and roughly 9 months prior to Bitcoin's spectacular and no less historical tumble, which saw the currency lose more than 60% of its peak value back in November of 2021. But that is not all, as Bukele also announced a plan to construct a brand new Bitcoin city, which would be shaped in the form of a coin, located close to the Conchega volcano, and funded through issuing $10 billion worth of government debt. Half of the proceeds from forming the bond would be used to finance construction of the city, while the other half would be invested into Bitcoin itself. Once the currency appreciates enough in value, the thinking goes, these investment gains would be used to repay the debt and presumably keep leftover profits for further investments. If this all sounds a little, unconventional to you, you might be onto something. So why did El Salvador take such an unconventional approach to economic development? Was it just a populist measure from the president, which was meant to distract attention from the country's vast and persistent socioeconomic problems? Or did this policy actually have some underlying merit, which most people just fail to see without additional explanation? Stay tuned as we investigate these and other questions in this video. El Salvador is a small country in Central America, located between Guatemala and Honduras in the north and the Pacific Ocean in the south. The country used to be a colony of Spain from the 16th century onwards, but gained independence in 1821. It then became part of the First Mexican Empire, seceded that, joined the Federal Republic of Central America, and then eventually became a sovereign country in 1841. El Salvador's independent history has been characterized by political and economic instability, including a civil war between 1979 and 1992. Nowadays, the country has a population of 6.5 million people, which makes it the 112th in the world by population size, while ranking 154th globally by territory, which is slightly smaller than the size of the state of Maryland. El Salvador's economy is quite small as well, with GDP sitting in 104th place in world rankings, similar in size to countries like Estonia, Sudan, Cyprus, and Cambodia. Interestingly, one of the things that has been keeping the country afloat economically are remittances, which is the money its migrant workers, based overseas, send to support family members back in El Salvador. The country leads the region in remittances per capita, with about a third of all households receiving cash transfers from abroad. As you can probably guess, life for a typical citizen and resident of El Salvador is quite tough, with limited opportunities for well-paying jobs domestically. Unsurprisingly, in the absence of decent economic prospects, many people turn to crime. To illustrate the extent of it, El Salvador is one of the most dangerous countries in the world, with its murder rate per 100,000 inhabitants placing it at the top of global rankings, with almost twice as high a rate as Mexico. So, as we said, life in the country is difficult. One other interesting feature of El Salvador's economy, however, is its energy sector. More than half of the country's electricity generation comes from renewable sources, such as its rivers and volcanoes, which tend to have high upfront construction costs, but are very cheap to operate once they are up and running. Being able to produce something that everyone needs at a much lower cost is usually a good thing. However, in the case of energy generation, this competitive advantage of El Salvador is difficult to monetize because of how expensive it is to transmit energy over long distances, even domestically, let alone exporting to international markets. Outside of remittances and renewable energy, El Salvador's economy is quite unremarkable. It has all the usual other sectors that most countries have in the 21st century, like retail, banking, and telecom. But not much else is unusual there, except, of course, Bitcoin. When El Salvador announced its recognition of Bitcoin as its second official currency alongside the US dollar, the world got curious. Bukele's broader Bitcoin plan at the time was quite simple, at least on the surface. Go bold investing in an asset that's been seeing unprecedented levels of growth up to that point, and then, once you're rich, repay the debts that helped you get there in the first place. But if it was that simple, why weren't others doing that too? The plan seemed too good to be true, and so everyone else held their breath to see what would transpire. As a reminder, Bitcoin is a decentralized digital currency which was invented in 2008 as a means for liberating the people of the world from the tyranny and instability of traditional banking systems. As you know, traditional currencies such as the US dollar, the euro, or the British pound are controlled by national banks, which work hand in hand with national governments. What national banks often do, therefore, is print more of its currency when required or expedient. For example, in response to various economic crises that face their countries, such as high unemployment, government budget deficits, or the need to repay international loans. When this happens, a typical result for the national currency is to lose some of its value, a concept known as inflation. This makes intuitive sense, because the more abundant something becomes, the less valuable each individual unit of that something gets. Inflation disproportionately impacts regular people because their wages often aren't able to keep pace with inflation's rate, which makes people poorer and poorer over time. And this is where Bitcoin comes in. By limiting the total amount of available currency in circulation, Bitcoin is supposed to eliminate the ability of national banks to arbitrarily print more money when convenient, which limits the gradual devaluing of that currency and protects regular people as the result. Knowing this, the only people who shouldn't, in theory, like Bitcoin are, as you might have guessed, the national banks and governments. Bitcoin makes their life more difficult because it removes the magic wand they can wave when times get tough, and they need to finance a new government project to keep the electorate happy or show some improvement in economic activity before the next presidential election. So why did El Salvador's government like Bitcoin so much? We were able to think of at least 5 reasons why El Salvador decided to run its Bitcoin policy. The first reason is that the move didn't really carry a trade-off for the Central Bank of El Salvador, because it had already given up its ability to print money back in 2001, when the country ditched its previous currency, the colón, in favor of using the US dollar as its new official money. That move was made in order to stimulate economic growth in the country, whose ability to borrow internationally was limited due to its currency's devaluation risks, so far as its national bank controlled the domestic money supply. Since the government had already lost its ability to print money 2 decades ago, the move to introduce Bitcoin didn't carry the same opportunity cost as it would for other countries. The second major reason has to do with remittances, which mainly come from migrant workers in the US, who regularly send money back to their families in El Salvador and make up the majority of the country's foreign inflows. Remittances often come with transaction fees, frequently to the tune of 10% of the transaction value, which is the money that El Salvador's economy under-receives, as it stays in the pockets of foreign-owned money transfer platforms. With Bitcoin, the thinking was that remittances could be transferred directly from crypto wallet to crypto wallet, landing more of the money in the pockets of regular El Salvadorians, who would then have more disposable income to spend in their country, thereby providing a boost to the local economy. The third reason includes the country's wealth of renewable energy. New Bitcoins can be mined by solving complex mathematical problems using purpose-built computer software, which tend to consume very high amounts of electricity in the process. Since El Salvador can harness the energy of its volcanoes at very little marginal cost, the country can gain a competitive advantage at mining Bitcoin at an industrial scale compared to other countries. This could then become a brand new income stream for El Salvador, which is otherwise relatively limited in other natural resources. In essence, mining Bitcoin and then cashing in the new coins can, in theory, become a clever way for the country to finally become able to export its volcanic energy. The fourth reason was meant to address the fact that the majority of the country's population didn't have bank accounts and instead relied on paper money for their everyday transactions. Converting everyone to crypto wallets would enable brand new economic opportunities, including maintaining verifiable records of people's incomes and expenses, which could form the basis of extending private bank loans to a bigger share of El Salvador's population. More credit can, in turn, stimulate higher economic growth, as people increase their consumption of goods and services. This, then, means more income for the country's businesses, which can be reinvested into further production going forward. The last reason that's worth mentioning is the cool factor, with El Salvador becoming the first country in the world that has officially recognized Bitcoin as legal tender. The move garnered widespread international media attention, with people around the world becoming curious about both the country in general and its curious Bitcoin experiment in particular. 1 year on, and industry surveys indicate that this interest has converted into an increase in tourism volume to El Salvador, which is definitely a positive for the country that's desperate to expand its income streams from abroad and reduce its reliance on remittances as the main form of exports. So, how has El Salvador's Bitcoin policy played out so far? A year after its initial announcement, the country's new Bitcoin policy is predominantly viewed as underwhelming by most overseas commentators. Although all of the country's businesses are required to accept Bitcoin as an official means of payment, only a small portion of them do so in reality. The El Salvadorian people also haven't embraced the idea of Bitcoin for their daily transactions, despite the government promoting the new policy by giving each citizen a crypto wallet with $30 worth of Bitcoin to be spent as they please. The government of El Salvador has also incurred significant losses on its own investment in Bitcoin and had to put its Bitcoin City project on hold too, as the country hasn't been able to secure the international loan that was supposed to finance its construction. Investors were simply too scared to lend money to a country that was open about its intentions to invest in what has turned out to be one of the most volatile assets in recent history. So here we are. The results to date have not been stunning, but it is still unclear whether the whole plan was doomed from the beginning, or if El Salvador simply needs more time to reap the benefits of its audacious undertaking. And whatever happens next, the world will definitely keep holding its breath to see whether the CEO of El Salvador truly has a sound economic strategy for his beleaguered country.